This one's important. The mechanics of a shakeout. We're Bitcoin-fund-manager.com. We protect and grow your Bitcoin 24 hours a day, 7 days a week. While all your coins stay in your exchange account, we just remote control trade them for you without the ability to withdraw. So you're totally safe, and we just do trades for you all day long, all night long, so that you can... All right, let's look through this. The mechanics of a shakeout. This is actually what happens during a shakeout. You buy a pump with FOMO, that's fear of missing out, because you see that it's going up. Let's see here what happened. Actually, this is probably... Yep, this is better. All right, let me reach my pen. You see this? Everyone was... We just dipped. And everybody thought, hey, Bitcoin's going to $800 again. Bitcoin's going to $800. Let's just sell everything. You sold everything here. And then guess what you did? Just as soon as we kept telling you we're bullish, we're bullish, we're bullish. And so you bought because you don't... if you didn't believe, or if you didn't trust, or if you didn't know to rely on our recommendations, then you would have just waited to see. You would have just said, let's see if he's right. And if he's right, let's buy in. So what you did was, after it went bullish and we had this major, massive spike upwards, you said, hey, he's right. Let's buy. You know how long this spike took? This spike took about 5 minutes. You didn't have time to buy as the price was going up. So you bought at the top. And guess what happened after that? Doof, it dipped again. So when you bought at the top, you bought at the top because what? You thought that the price was going up. It stopped going up. Now it went down, but this is where you bought. So you sold here, you bought here, and guess what? You probably sold again here. So you're doing exactly the opposite of the market. Here, let's go to the next step. You buy a pump with FOMO because it's going up, but in reality, it already went up. All right, next step. You sell the dip with FUD because there's some exchange hack, or because Ethereum might have a bug in it, because it's going down. Let's analyze that. So this is where you bought, and then you hear that there's a Cryptopia hack. Oh no, but it's just Cryptopia. It's just a tiny little exchange. It's not going to make any difference. And look, besides, it already recovered after this dip. After this dip right here, it already recovered. We're already up here. But then insider selling starts. Sorry, I tried to hit pause before that sneeze, but I couldn't. Anyway, the sneeze won. Insider selling started. Dumps occurred minutes prior to security public audit release. This URL, you can just snapshot this URL and you can find it on your own time if you want to type it in. This dump happened. Poof. And you're like, well, we had two dumps in a row. I'm sure it's going to go up because it went up. It's going up. I saw it go up, so it's going up. As you're seeing the price drop down, you're still saying that it's going up in your own head. And then what ended up happening? A bullish harmonics breakout retest. Bam! That's a retest. Why? Because look, this is the retest zone. You see these wicks here? These wicks? These are the support zones for the wicks. And guess where they take us? They take us right there. They literally take us to the base of the wicks for the bullish harmonics. And we just hit that wick. We might actually hit it one more time, just like we hit 1, 2, 3, 4, 5. 5 times we hit this point. So we might actually hit this point again, 1, 2, 3, 4, 5 times. But now, after we've hit the bottom, guess what you're thinking? Most of our followers are thinking, we should sell this dip because there's FUD and it's going down. It already went down. Reality, it already went down, guys. This is the mechanics of a shakeout. Now, let's see what happens psychologically as a trader. Now, as an amateur trader, you start to invent fictional evil characters, fictional evil characters that manipulate the market so you can avoid the humiliation of admitting that you reacted emotionally instead of anticipating. Oh, bonus, citing manipulation also saves you the pain of having to learn and adapt. Now let's look at what really actually happened. Just the facts. No interpolation, no interpretation, no perception, just facts. We dipped 1, 2, 3 dips. This is where you buy. This is the buy zone. Technically, if you really want to wait and be conservative, you want to buy up here. but we felt, yeah, that's fine. That's fine. As long as you have confirmation, you can weather this downstorm. If you're really, really technical, what you do is you buy up here at the confirmation and then you buy on the retest. You can just look up confirmation retest long. Just Google that, confirmation retest long. Here, I'll type it up for you. If you Google this, what you'll learn is that this is exactly what algorithm bots do, Wall Street trader bots do. This is exactly what senior master traders like Peter Brandt do. They wait for confirmation of a bullish or a bearish setup. Then they look for the retest, and then they go either long or short on the retest. They either buy or sell on the retest. Now, so we've had the breakout, we have the retest. This is where you go long. What we did was we went long 33x here on Ethereum, made a ton of money. We made over 300% on this particular trade here. And then when we got here and we stopped, we said, hey, let's deleverage. And we got rid of 66% of our profits we just banked. And with the rest of the 33%, we still went long here, which was bad. But what we did was, with the rest of that 33%, we broke half of it in to a long here. And the other half we just held for this dip. So what we did was we bought long here and we bought long here. So our average price is actually right here. So we're still negative right now. But since we bought long here and we reduced our leverage to 10x and 10x, now what we can do is increase our leverage to 25x, 35x, 50x, and bring our net cost. We probably won't be allowed to do 50x just because of the gap, but the spread between this point and this point. But as you raise your leverage, you bring down your average cost of acquisition, average entry point. So that's what we're doing here. Well, if that's the case, if we have a breakout in a retest, why don't you just always buy down here? Because you don't always have a retest. Did you get that? You don't always have a retest. So if you're waiting for this and we're really bullish, we hit this and then we just go bye-bye. See this green line? Just continuously follow this grid and you never get on the train. This, you know those express trains in the subway? Sometimes a train that you waited for 20 minutes doesn't stop at your station because it's not an express stop train station. Express train stop state. Anyway, you know what I'm saying. So you have to know whether this is going to retrace or not. Sometimes it doesn't retrace. 80% of the time when you have a bullish harmonic like this, it does go up. 85% of the time it does go up. So what's safer to do is just to buy here without the confirmation because it's still cheaper than the retest point that may or may not happen. This is this is 85% sure. This dip is about 40% sure. And going back up from here is about 60% sure. So 80, 40, 60. Where's the highest likelihood, highest ROI, lowest risk place to buy? Right here. Depending on your risk tolerance. If you have really high risk tolerance, then you buy here like us. If you have low risk tolerance, you say, no, I'm only going to buy really, really confirmed breakout patterns on retest. Then you'll miss 2/3 of all the buys, but it's okay because this is still super high likelihood, really good entry price. And you'll miss earning 2/3 of the money you could have earned. What did Rockefeller or Getty say that the greatest amount of money that you'd ever lose? There it is. The greatest amount of money you'll ever lose is the money you never made. And if you waited for this confirmation, do the stats, look at the stats, just do 5 minutes worth of research on your own. And if you wait for this confirmation retest, they only happen 1 out of 3 times. So that means that if you always wait for a retest to buy, you're going to miss 2/3 of your money. So if you're going to be a 3 millionaire in your life in the next couple of years as Bitcoin goes skyrocketing, you would only be a single millionaire. What would you rather be, a single millionaire or a multi-millionaire? That's the difference between waiting here versus buying here. So if you're not using BitMEX, you're just on Binance or something, buying here right now would be really smart. You have a high likelihood of going up and a low likelihood of going down. Probably a 30% chance that it will continue to go downwards, down below all-time low and hit $3,200. 70% chance that will rise up and hit $4,500. All the way up to $4,500. percent chance that we'll go all the way back up this green line and keep following it. Remember, this is where the 3 drops happened, and we'll just keep going up. So those are your odds. Play the odds often enough, and with just if you have, here, another tip. This is why we give you odds, risk management. If the odds are 70% that we're going up, just invest anywhere from half of those odds to exactly those odds, 70% of your holdings. So that if by chance the 30% does go down, at least you're left with that 30% plus 70% of your initial investment. So you still have over half your earnings left. Most people lose 80, 90% easily, just within weeks. Now, if a bear market lasts a year and a half, then yeah, you could lose. You could be a good trader and still lose 50% or 60%, but you're not going to lose 50, 60% in the week, like most people do, if you follow this strategy. Now, if you have no interest in becoming a professional trader, this is where you find us. We take clients who have over 20 Bitcoin of active investments, and we trade for you. We protect and grow your Bitcoin 24 hours a day, 7 days a week, so that you can